Okay, good morning, folks, and welcome to Stock Charts Today. This is Bob Desmond, and it is May the 25th, 5:13 in the a.m. Eastern Standard Time. Let's begin with the U.S. dollar, which had a very, very rough day yesterday. However, we're still holding support. We haven't broken yet on the dollar. Now, I focus on the dollar for one main reason, and that reason being is that we are long of the gold mining names. We own silver, and we are looking to build on those positions, but it's difficult to do so when you have a strong U.S. dollar. But in recent days, you've seen both the dollar and the price of gold and silver move higher. Why is that? It's because you have geopolitical risk on the table. And much as what you saw back during the Brexit days, the Brexit vote, you saw gold and the U.S. dollar trade in tandem, but that will not last for long. Something's got to give. These are all 4-hour charts, so we're not going to have the answers of who looks strongest on the 4-hour charts. But over the weekend with members, I'm going to go over the week ahead commentary, and we're going to review the weekly charts and the daily charts and try to divine which of the two, meaning the dollar or gold, looks strongest. As well as we will do a review of the major indexes, all of our positions, and a review of the charts we're looking for in the coming trading week. And what I also appreciate from viewers is, what else can I do on these videos in the morning? I get up really early to do them, and I want to make sure I'm providing the most value. So if you have any suggestions what I could do more of, what I could do less of, please, if you watch us on YouTube, leave a comment below. I really appreciate feedback. Let's get to the charts. So again, the dollar holding support. What we're looking for here, we are up this morning. We're looking for a breakout on the dollar. Now, RSI, we have a bit of a downtrend going on here. Note how we're putting in lower highs, but lower lows are hard to come by. In fact, we're really basing here on RSI. So using a 4-hour chart, very short-term chart, what do I divine is the path of least resistance? It's unchanged. It remains to the upside despite the weakness that we saw yesterday. I mean, while we were down yesterday, we did not break support. Now, would I be shocked if we broke? No, I wouldn't. What is keeping the dollar up? Look no further than the euro. The euro has been extremely weak relative to the dollar, and especially relative to the yen. So here's our trading channel. We've stopped going down. We may have seen a bottom here in the short term anyway on the euro. That would be dollar bearish if the euro rallies. Let's see if we have any divergences on RSI. We do have higher lows on price and on RSI, but again, I need to remind, 4-hour chart, very, very short term, very, very volatile, but certainly less volatile than a 15-minute or a half-hour chart. So here we are, a very tight trading range on RSI and on price, much tighter on RSI. So we may get a breakout here on the euro. So both the dollar and the euro are consolidating. Now, the dollar versus the yen has been very, very weak. And you can see that the Japanese yen has been rallying. We have pulled back off the highs, and we are forming a continuation breakout pattern. And it looks as though we are moving higher. Next price target, this upper band of resistance here. Let's take a look at commodities. Gold. So gold, it's very critical to point out here that gold is back above the 1300 level. The key is, will we close out the week above this level? So here is what appears to be a bull flag breakout, which is a continuation breakout on gold here. We have broken out this bar here in red. That's a breakout at 5 a.m., 20 minutes ago. So we have a breakout on this 4-hour chart out of a bull flag formation. So at least for today anyway, the path of least resistance appears to be to the upside. As for silver, same deal here. Very similar chart. We have broken out of a bull flag setup, but we did so the prior bar, not the current bar. So silver looking good. We own it. We're looking to add more using the USLV. Crude oil breaking down. We have a lower high and now a lower low below support. So oil, which has had a spectacular run, appears to be moving into a corrective phase. And the market has been sending signals for a couple of weeks now that this oil run was beginning to lose momentum. How do I know that? Simple. This is why we have our RSI up. Take a look. The trend of higher highs ended back here on March the 21st. And ever since then, while we've been putting in higher highs on the price of oil, we've been putting in lower highs on RSI. And now, and this is the biggie, once you start breaking down to lower lows, that's a big problem. So pay heed here, folks. If you have profits on oil, think about making some of those profits real. The market is sending you a signal. We can argue and complain about the markets are rigged and whatnot. Listen, this is a freebie. Okay? We were in a trading range, a downtrend. It's now broken the lower band of that downtrend, both on RSI and on price. What more do you need? Make your profits real, at least a portion of them. Remember, this is a 4-hour chart. I'm not saying that you have to close out your position because the rally in oil is over. No, it's going to take a pause, and it may just find a bottom, and then on a daily chart, we'll look to re-enter the trade, but you need to make your profits real. Natural gas, I'm going to call this the Anthony S. trade. One of our members asked me about this on member stock chart request, and we've been watching it ever since, and what a tear this has been on. In fact, Anthony, if you're out there, I'm going to be going over your new request GE in a moment. Let's just get through Nat Gas. Yeah, really nice breakout of what we're building here is a base, right? So here's the left side of the base, the bottom, and now we're building the right side of that base, and you look for a bull flag pullback and then a breakout. So right now, we are seeing a continuation move higher on Nat Gas. I think that we're going to move higher here out of this consolidation range. RSI flashing, no divergences to speak of. We do have a bit of a lower high here, right? And we have higher highs on price. So we'll keep an eye on that. As long as we don't break down to new lower lows on RSI while price moves higher, we're all good here. So Nat Gas looking good. Let's go to the stocks that we're watching for today as well as member stock chart request. All right, the first chart up is the TNA. The TNA puts you long of the small caps. It's a leveraged ETF. If you want to avoid the volatility, yet you want exposure to the small caps, look at the IWM. Right? Very similar price action here. Now, I will caution, volume on the IWM, which is more important than the volume on the TNA, has been very light and trending down. Big problem. We booked profits on our TNA trade back here. It was our game plan as we moved into the 22nd that we would book profits on strength, and that's exactly what we did. We put in an advanced order, we booked profits, and you could see that the shares just pulled back, and now we are bull flagging out. Now, this is a continuation breakout pattern, but what we need to see are volume bars rise on the breakout. So we'll be looking to buy the TNA back on a breakout. So members, more to come here on TNA. Next chart up, Costco. Let's update this. We'll throw some lines up here. All right, so Costco, in a pennant formation. Bullish key reversal yesterday. It is holding support. So I'm really liking this setup here on Costco. Yesterday's volume was weak. We may be long of Costco very soon. Members, stay tuned for an alert. All right, to Anthony's pick, General Electric. I started off my analysis earlier of General Electric with the weekly chart as I normally do. And I wasn't even going to go to the daily chart. I was going to say, Anthony, just walk away from this. Don't get involved. We did break out a few weeks ago after becoming a bit oversold. I just want to update this chart. Okay. So we broke out the week of May the 7th. Continuation breakout the week of the 14th. This week, a bearish engulfing of the prior week's move. Now, initially, I was going to say walk away from this. However, I started looking at it closer, and I figured, you know what, this is probably a retest of the breakout point. It's worthy to give it more consideration. Let's take a look at a daily chart to see whether or not there's any there on a daily basis. So let's go to it. Now, on a daily basis, we have an inverted head and shoulders setup. Left shoulder, head, right shoulder. Here's our neckline at 15.59. We pulled back, obviously, on Wednesday. Inside day on Thursday. No new high, no new low. So I think that these shares can be bought with a stop right below the week's low. Because if we drop back down into this prior trading channel, in all probability, we're going to retest the prior support level. And remember the old adage, weak stocks tend to get weaker. And by using that adage, we will probably break the support level. That's what history has shown us. So tight stops here on any longs. Back to the daily chart. If you bought today, I would look to add on a rally and close above 15.59 because that's a continuation move higher. So that's my game plan here with GE. Good volume yesterday. Watch your Stokes. We did have an uptrend going on here. Yesterday, that all ended. The fast line closed down below the lower band of support and closed below 50. Now, while it means really nothing yet, keep an eye on it. You really, today, this Stoke needs to hook back up. We need to see a sign of gaining momentum here on General Electric, or else I would avoid it. And look for a pullback and potentially a higher low double bottom setup on RSI. That would be very, very bullish stuff. Next chart up, GrubHub, daily chart. I like this setup here. I do see some concerns. Yeah. All right. So what we have here is a stock that is, by and large, in a trading channel. Right now, I'm going to update this again, but right now what we're seeing is on a very short-term basis, we are in a triangle formation. We were in a flag formation back here. We broke out. We dropped back down. Now we're tightening up once again. And what that's causing are your indicators to break down. So while I'm not willing to trade off the indicators because they're skewed, these are momentum indicators. And momentum is nada. There's nothing there in terms of momentum right now. We're in a trading range. You need to watch price and volume. Forget the indicators. Let's update the trading range to divine where we are at on a longer term basis. So what we're doing here is updating, excuse me, I've updated the prior flag formation and extended it out. And you can see now what we did is we broke out and we've been consolidating on top of it. We're holding support. That's key. Forget about the indicators until such time where we are rallying and the indicators fail to confirm the breakout. Right now, we're consolidating, and we're looking for a breakout on GrubHub. I think it's coming. I think we're going to move higher here on GrubHub. So members more to come with a potential long on this stock. And once we get through 106.70, I think we're going to probably add to any long position if we put one on. And then on a rally up and above 112.41, we'll be looking to add to our position, because after that, folks, there is no overhead supply, meaning no old buyers who have been sitting with a loss waiting to get made whole. It's what I like to call clear blue skies. It makes for smooth sailing. So watch out for GrubHub. I think it's breaking out. We're getting a bit long in this video, so I'm going to speed it up here a bit. KSU looking good. I went over KSU a few weeks ago. I said buy the breakout, wait for the breakout. We still don't have that breakout, but we're very, very close. The transports broke out yet again yesterday, and they recaptured the support level. Stokes are hooking up higher. RSI is hooking up higher. Bullish key reversal. We have a massive inverted head and shoulders setup. Left shoulder, head, right shoulder. Here's our neckline right here, very close to a buy point. Blue Apron Holdings. I think we're setting up here for a bull flag formation. Search the website. I spoke about Blue Apron a couple of weeks ago. Go to the vlog page, type in APRN, and you'll get the video that I discussed Blue Apron on the last time. We were bullish on it. We remain bullish on it. We do have overhead supply. I think there's a good chance that we break out here. However, keep in mind that the longer term trend, not that there's much history here, is really still to the downside. We have been putting in higher lows, and yes, we did close above the May 7th highs, the week of the May 7th highs, but ideally, to really get this downtrend in the rearview mirror, I'd like to see a close above $4.20. I think shorts would go screaming for cover on a close above that level. So the weekly chart is looking good. I would like to see us close at the highs of the week. The fact that we're seeing a topping tail on top of this weekly candlestick is a concern. What that tells us is that you have sellers moving in and selling strength, and they're not finding value at these prices. Next chart up, Alliance Bernstein. We booked profits here on May the 22nd. It pulled back. Now we're looking to re-enter the trade. Volume yesterday was good. Volume for the past several weeks to the upside has been very good. But to be fair, to the downside, you've seen some big institutional sellers in there as well. So AB, we're looking to get long of once again. It's bull flagging out. And the DPST, I spoke about this the other day with members. This puts you long of the regional banks. A lot of banking regulation has been rolled back. Here we are, 2007, all over again. But the real winners are going to be the regional banks. So we got a pullback yesterday, and I mentioned that on, I believe it was Market Wrap for Tuesday. I spoke with members and I said, watch for a pullback to a retest of 88 or even better, 86. We got the pullback yesterday to as low of 84.70, and what makes this all the more sexy, I wouldn't have bought it down here if we closed down here, because that would have been a significant breakout. What makes this really, really attractive is that we rallied back to recapture support. So in all probability, we are going to be long very soon of the regional banks. Members, expect and alert. That's it for this morning, folks. If you watch this on YouTube, remember, leave a comment below. What would you like to see more of? What would you like to see less of? Subscribe to my channel. Click that bell, get notified of future videos. If you watch this on the website, enter your email address, We Hate Spam Too. You'll get the Week Ahead Commentary podcast and some free trade tutorials. If you found us through StockTwits, Twitter, Seeking Alpha, follow me there. Leave a comment, and I'll certainly get back to you. Everybody have a profitable trading day and have a great weekend. Be well.